Hello everyone, this is Sen from Sen Invest. Today I'll be discussing the risk involved when investing in a degen DeFi project. Now the risk involved in this type of investment are a bit more complex than might be initially apparent, so I divided them into three different easy to understand levels. Let's get started with level 1 risk, fiat currency. So in the picture here we can see some different currencies from around the world. We call these fiat. The risk with fiat is inflation. The purchasing power of the fiat declines over time. And this inflation simply translates to the prices of goods and services costing more than they used to. The philosopher Voltaire famously said, "Fiat currency always eventually returns to its intrinsic value, which is zero." So what's the risk mitigation? In my opinion, owning physical gold is a great way to mitigate risk involved with inflation. Gold has retained its value over thousands of years and is often regarded as a long-term inflation hedge. So why did I say long-term here? That's because the value of gold can fluctuate given different geopolitical events. Let's take a look at the chart to understand why. So here, this is actually a gold-backed crypto. If you can't buy physical gold, Pax Gold is a crypto token which is backed by physical gold. So it's very convenient to buy and sell. So if we look at the price for Pax Gold, we can see it was around $2,000 at the middle of April. But it's currently going for about $1,800. So if we had bought at the middle of April, we'd be sitting at around $200 loss relative to fiat currency. So that's why we need to look at the long term. We can also see from the chart here that there's been a lot of sideways movement lately. Gold is not as volatile as Bitcoin, Ethereum, and some other cryptocurrencies that we're used to trading. Let's move on to level 2 risk. This is layer 1 crypto. If we look at this picture, we might recognize this as the Binance coin, or BNB. The risk here is that the value of the crypto, such as Bitcoin, Ethereum, or BNB, declines relative to fiat. So we can also see an example of this in the chart. This is the BNB price relative to US dollar. Now, we can see about 3 months ago it was going for $450 for one BNB. Now it's going for about half that price, around $200, $225. Risk mitigation involves dollar cost averaging, which is an okay approach, or technical analysis, which in my opinion is better to avoid making a big investment at a peak. So last year I bought Bitcoin in small increments all the way up to near its peak around $60,000, $70,000. Notice here I said small increments. I didn't go all in. And I bought it on the way up. I've also bought it on the way down. And I'm currently still buying it. So this is a strategy very similar to dollar cost averaging. Bitcoin had a support level of around 30,000 US dollars for a while, which might have made a good buying opportunity. And after it broke through 30,000, then it also had a support level around 20,000 as well for a while, which also could have provided a good buying opportunity. In those cases, investors could invest more than they would normally invest using dollar cost averaging. Let's move on to level 3 here, which involves a layer 2 crypto. Here is SAFUU. Some of you may have heard of this project. So in my opinion, SAFUU is a high-risk degen DeFi project. I've done a video on SAFUU a few months ago if you'd like to learn more about it. The risk here is that the value of the token, which is SAFUU here, declines relative to the coin used to purchase it, which is typically BNB. Let's look at a chart. So here's the SAFUU price relative to BNB over 180 days. We can see that back in March, SAFUU was going for half of a BNB, and now it is going for about 0.0607 BNB. So the value of SAFUU has declined relative to BNB. Risk mitigation strategy here would be to systematically de-risk relative to the level 1 coin using technical analysis. So for example, look for support and resistance on the SAFUU BNB chart. Back on the SAFUU chart, we see a line around 0.5 BNB. This could have been a good selling opportunity to get out of SAFUU near a resistance level. Let's now talk about risk management strategies. My first strategy is to HODL at layer 1. HODLing a layer 1 coin is very conservative by crypto standards, and ironically, it doesn't involve the degen DeFi project at all. The rationale here is that I believe in crypto layer 1 coins and I want to keep them in my cold wallet and wait for price to go up. So I'm not even keeping them in a crypto bank, they're not on the exchange, they're in a cold wallet that I hold, and I'm simply waiting for the price to eventually go up. Then I'm going to move them onto the exchange and sell them. Let's say our starting investment was 0.5 BNB. The ending investment, if you did no selling, would also be 0.5 BNB. So you wouldn't realize any crypto profits via interest, and you also wouldn't realize any profits from crypto relative to fiat until you sold. Let's move on to risk strategy 2, which is to stake at layer 1. Staking a layer 1 coin on Binance is moderately conservative, in my opinion. The rationale here is that I believe in crypto layer 1 coins, and I want to grow them with a decent APY without taking big risk. So while staking does involve some risk, you're most likely going to get back the coin you staked, along with the rewards you've earned. Starting investment would be 0.5 BNB. The ending investment after 120 days would be as follows. So we start out with 0.5 BNB, we multiply that by 0.1299, which is the APY. Then we divide that by 365, the number of days in a year. We multiply that by 120, which is the number of days that we're going to have the stake. And then we add that to the initial investment of 0.5, so that gives us 0.52 BNB. Now, one of the drawbacks here is that this high APY stake on Binance is limited to 0.5 BNB, unfortunately. If you wanted to invest more, you'd earn a lower APY. The third risk management strategy is to de-risk at layer 2. In my opinion, buying a degen DeFi layer 2 coin is very risky. The rationale is that I'll invest in a risky asset, but I want to exit before the project fails. In reality, a lot of crypto projects don't make it, and they do fail. Starting investment would be 0.5 BNB, which in my case I was able to get 0.97 SAFUU back when I bought some. The ending investment after 120 days is your 0.5 BNB has been returned because of selling little bits of SAFUU over the 3 to 4 months, and your SAFUU holdings are also right around 1 SAFUU. So now, if we calculate the value of SAFUU relative to BNB, we multiply 1 times 0.84, which is the amount remaining after taxes, and then you divide that number by 14 because that's the exchange rate of SAFUU to BNB at the time of filming this video. So that is 0.06. We add that to 0.5, and then we get 0.56 BNB, which is slightly more than the staking option. The final risk management strategy is to HODL at layer 2. Now, buying and holding a degen DeFi layer 2 coin is extremely risky, in my opinion, which is simply because a lot of crypto projects rug or fail. The rationale here is, I believe this risky project is going to last long term and make me rich. Starting investment again is 0.5 BNB. The ending investment after 120 days is 14.6 SAFUU. So if you'd like to know how I came up with that number, let's go to the handy SAFUU calculator. So let's put in 0.97, and we see my setting is 120 days here. Here we can see the estimated rewards would be 14.6 SAFUU after 120 days of straight compounding. This example here shows the power of compounded interest. So we would have our 14.6 SAFUU. We multiply that again by 0.84, which is the amount you keep after taxes. We divide that by 14, which is the exchange rate to BNB, and we get 0.87 BNB, which is the highest amount that we've seen from all the strategies. So to recap, let's look at how the different strategies compare. HODLing at layer 1 gives us no gains, staking gives us moderate returns, de-risking at the layer 2 gives us slightly higher returns, but not much more than staking. And then HODLing at layer 2 gives us the highest returns overall. However, the risk is also the greatest here. But that's not all. We didn't talk about fiat here, did we? Let's see how our initial investment compares to the value of fiat. So BNB to USD price 4 months ago was around 373. So that multiplied by 0.5, my initial investment would be about 186 US dollars. The price now is around $220 for BNB. But if we had used the fourth strategy, we would have 0.87 BNB, and that's 191 US. So we do see that we made a very small profit here of about $5, which should be more than enough to cover the gas fees, which, by the way, were not included in my calculations. They're very low for the Binance Smart Chain. However, the amount of risk we had to take on to make this profit is very high, in my opinion. Now you understand risk management strategies for investing in degen DeFi projects. If you found today's content helpful, please remember to subscribe to my channel, hit the like button, and comment below this video. Have a great day, everyone. Bye-bye.